All right, so this video is going to be showing how I come up with my trade ideas using online trading campus tools by Bernd. So I'll be sharing a trade idea also and how I ended up coming up with this trade idea. And if it works out, fine, you got the trade idea ahead of time. But again, this is not financial advice. I'm just documenting how I take my trades, and this is a trade idea that I have for the coming weeks. So if it works out, fine. If it doesn't, then we still learn and know what to correct going forward. And while on your screen, you can see British pound is what we are looking at. So British pound, and I start my analysis on the futures. And when I start my analysis on the futures, it's quite mixed because most times I start with seasonality, right? Seasonality from online trading campus. And then sometimes I start with COT data. However you want to start, but as long as you end up in the same narrative, in the same directional bias, then that's just what matters to us. So starting with British pound, I start with seasonality, and if I open seasonality, I always start from the 5-year average of seasonality. And on the 5-year average, I want to see points where there were pivots in the market, right? Where there's expected change in the market. Those pivot points, like this, like this, like this, also. So, this type of directional change, anticipating a directional change, is what I like to pay attention to. So, starting from the 5-year time frame, I've observed that in the coming weeks, we will be expecting a move to the downside according to the 5-year average. I wouldn't pay attention to this so much because the market still expects a move to the upside before this particular move, which should be happening 2nd of February according to the 5-year average. So now I go to 10-year average because I'm looking at 3-year averages, but I need at least 2 out of the 3 averages to align before I'm sure I'm taking a trade. And on the 10-year average, which is this chart, I still notice this particular point, 2nd of February, being a point where I would expect the market to turn. So I would pay attention to that date. So you see, twice that date has popped up as a point where we should expect the market to turn at. So I will be paying attention to I'll be paying attention and not ignoring that. So this 2nd February is a point where I'll be paying attention to. Now, finally, 2 out of 3. Now, on the third one, 15-year average, are we going to get the same thing? Yeah, we are seeing 2nd of February being that point where we should expect a turn to happen in the market. So you see, 3 out of 3, not even 2 out of 3, 3 out of 3 seasonality suggests a move to the downside starting from the first week of February. So does that mean I enter the market immediately? Not necessarily. I'll still have to wait for a couple of things to align. And my next step is looking at valuation. So I look at valuation and I go to the dollar valuation, the valuation against the XY, not necessarily the bonds, just against dollar. And first of all, what do I look at? I first of all look at the 10-year. I adjust it to the 10-year ROC length. So 10-year look back is not 10-year. I look at the 10 ROC length, it's not a 10-year. So the 10 ROC length is what I look at and look if we are overvalued or undervalued. That's what I pay attention to. Like if you've watched the documentary, prop firm documentary by Bernd, and you've watched his recent video on how he makes use of this tool, we want to look at overvalued or undervalued. So this green line, undervalued, whenever we are here, we expect a move to the upside. When we are overvalued, we expect a move to the downside. And right now we are extremely overvalued, which is something we want to see. So two datas aligning right now. We see seasonality suggesting a move to the downside, and we see that valuation is saying we are overvalued right now. So now I would confirm that with going to the 30 ROC length, because we can stop at 10, but then if you look at long term, because 10 ROC length is short term valuation, 30 ROC length is long term valuation. If we are if we are undervalued or overvalued short term and we are the same buyers long term, that would give us a higher confidence in actually taking the trade we want to take. And right now, we can also see that long term valuation tracking, we are seeing that we are also overvalued long term. So that is what we want to see. So seasonality check, we've checked valuation and is also giving us a check. Is also looking good. Valuation looking good, seasonality looking good. What crowns up this trade for us now is if we go to the weekly time frame, because all our analysis we started with was on the daily time frame. Now we would go to the weekly time frame, and that is what will crown up this trade and make it an all stars aligned entry for us. So we go to the weekly time frame, go to COT index by OTC, Online Trading Campus, and we look to see in the oscillator, are we in extremes? And right now, as you can observe, we can see divergence. You see that the retailers are being bullish, institutions are looking bearish. Institutions are looking bearish while what is happening, while the market is buying. So that is something to pay attention to. You can see divergence between the institutions and present price action, and the retailers and the hedge funds are buying, which is very typical. And we can see the institutions in a different place. And right now we are already in this very, very close, actually just few, can call it few pips away from getting into this extreme level from the institutions. So you can see that institutions are becoming extremely bearish, and the retailers and hedge funds are looking bullish. So we want to be trading alongside institutions and against the retailers. So you see that everything is actually aligning properly. And if we should even look at raw net position, because aside looking at the index, another thing I pay attention to is the net position, to also confirm that yes, this divergence is happening right now. And what can we see once this loads up? You would notice that the retailers are looking let me take that back. So retailers are looking bullish compared to their previous behavior. You can see where they were as of November, but you can see a move to the upside in terms of orders. So the retailers are looking bullish compared to previous behavior. We are looking at net position and what is happening on the institutional side of things. You can see that institutions are looking bearish compared to previous behavior, and that is exactly what we want to be seeing. We want to be seeing diverging positions between the institutions and the retailers. Now we get to the important part. How do we now carry all this fundamental data and transfer it into the chart and take our trade in the market? And I'm coming at this from the experience I had last year, which was a not so good experience where fundamental analysis would be correct, but where I would fall short is trying to rush my technical analysis and trying to hop into the trade as soon as possible, feeling like I would miss out on the trade. And that's where this year has become a new approach entirely. And what am I planning on doing this year? As much as possible, I will be waiting for my setups to come to me. If this trade doesn't come to me, then I forget about it. And know, okay, this wasn't a trade for me. It wasn't dealt in my deck of cards, and I wouldn't beat myself up, because on the weekly time frame we are already in this rally based drop. The market has reacted to that level once, but if you go to the daily time frame, you see a couple of supply levels that you might say, how about we take trades from this level already, because this is a rally, a base, and a drop here, and we also have up here a rally base drop. So why don't I just take from this first entry? But what I've learned from the market from last year is that the market can be funny at times. You might be thinking is this level, but there's another level above. So if there's a level on top of level, I would rather go for the level above compared to the one below. And this is how I'm coming up with this particular trade idea. I would rather go with this rally based drop from here compared to taking this particular trade, because with this particular bullishness from last week, with these aggressive candles going up, there's likelihood that the market might still continue to the upside. Because remember, seasonality doesn't really start being bearish until the 2nd of February. So this is when we are expecting seasonality to start shifting, or we expect the market to start moving bearish. So right now we are still in January, even though it's the last week of January. This particular level here can be taken out as liquidity, very likely, and then market turns from this supply level here. And you might also confirm that yes, here is not quite a fresh level, because the market has come into this level once. That was back in September last year, but that's fine. On the other hand, we have this preferred level, because there's a wider version and then there's a preferred version, and this is how I plan on taking this particular trade on the British pound. And today is 26th January, so this is analysis before, this is a proactive analysis before the market gets to that particular point. And using my Fibonacci, which I've set to give me a 30% of this entire range, this is what it will be looking like. I'll cover for the wider version to get my stop loss level. And this is why I do this, because I've noticed from last year, if I cover the preferred version level, the market can come and take me out and not get to the wider version stop loss and then move in my direction. And as much as possible on my funded account, I'm trying to avoid that as much as I can. So I get the stop loss for the wider version level personally. Once I've gotten the stop loss of the wider version level, I take my trade from the preferred level. And if you look, you'll see that the preferred level is also a fresh zone. The market hasn't come to this level. And even though I have this level, I still have to look back to protect myself, to see if there's any other level which is stronger than this or fresher than this that the market might likely come to and turn from. So I'll map the highest points here and then look back. And looking back, I can notice that there's no other valid level. This level here has been taken, this level has been taken above. There's no other valid level aside for this cluster here, which doesn't really look like a clean supply, because there's a lot of choppiness before the eventual drop that happened, which was actually from this level. And I've mapped out this level from last year, so which was actually from this level. So this was the eventual level, which was a base drop here. So that was where the market event, this is the only place you can classify as a zone, but it's actually far from the top of this place. So I would prefer taking my trade from here rather than taking it from the other point. So this is how I come up with my trade ideas using Bernd Skupinski's tools. And I'll be placing my entry live so that you guys will also see me take that trade live on my campus fund. So I'll be placing a pending order live so you also see. So my target would be this next demand level, usually 1 to 2, and I'm out of the market. But then I'll be monitoring to see how this actually plays out. If it goes beyond 1 to 2, fine, I'll be taking the trade. 1 to 2 target, fine for me. Or what we can also do is target this level below, which would also be a 1 to 3 weeks to reward. So whichever one it's going to be, I would keep you updated. But this is how the trade will be looking like from the preferred level. So now let's go into setting the same trade on my campus fund account. So this is my campus fund account, and right now P&L is also looking good because I have a couple of trades that I took using supply and demand. I'm still waiting for this trade on IWM, which is Russell ETF, to get triggered, and everything would be looking good. And hopefully this trade goes well and then increases my P&L and it makes more profit for me. But the two trades I have running, two positions, is one on gold and one on HK50, which is the Hong Kong index. So when the market opens on IWM, which is the Russell, we would see how that particular trade plays out. But at the moment, what is important is for us to set our entry and ahead of time, and we'll see how that goes. So going GBPUSD, since we've gotten our fundamental analysis corrected and we've gotten our technical analysis correct, so we just have to set the entry. So we'll give the charts some time to load, because sometimes this usually just happens where you would say no data. We'll give it some few minutes. So I hope it made sense to you. If you have any question, please drop it in the comments. I would definitely be responding to you. I would definitely answer any questions you have about how I came up with this eventual idea and this trade idea that I have loading up. So I'll try reloading the page so I'll see if it comes up, but my network is just terrible. That's why this isn't coming up at all. And there's nothing I can do about it. So still the same thing. Just Lord have mercy. So you can basically just go and do the same thing on your own chart. I don't know if this is how it's looking like on Vertex, which is another account I'm managing. I'm trying to get this account out of drawdown. So you'd see, even no matter how long you've been trading, drawdown periods are inevitable. So this is a trade I have on Vertex, still the same level that I'm covering. So you would see it's from the preferred version that I'm actually planning on taking this trade from. So yeah, so you see, everybody has their own periods of drawdown, and this is how the trade is looking like. Even though Campus Fund is taking time for it to load, but still from this preferred level is where I'm planning on taking these trades. Is the fresh level. The market hasn't come into this level yet. But if the market chooses to turn from here, because you can see a slowdown in bullishness. So if the market wants to turn from here, it can still turn from there. That is very fine, but if it's better to be safe than sorry. If market turns from here, I can look for entries on the smaller time frame if I'm sure the market is about to turn from here, in line with the February seasonality. But if market wants to still move up, then I'll be saving myself from potential losses in the market. So at least you can see what I'm dealing with in terms of network, which is just crazy. It's crazy, man. So just not to waste your time, you just apply what I like. You can just basically apply what I just thought right now. You can basically apply it on your own chart if you want to follow this analysis I just made. But if you still want to be safe, it's still very, very, very fine. But that's basically how I come up with my trade ideas using Bernd online trading campus tools. And that's all for now. I'll be waiting for your questions in the comment section, and I'll be answering them definitely, and I'll be giving more feedback on how the trade plays out. But for now, take care, and I'll be seeing you on the next one. Bye.